Hello, I'm Nick Quinn, and this is the weekly preview for September 19th, 2022 from the team at forexsignals.com. Well, it is Fed week. On the back of last week's epic CPI numbers, the United States Federal Reserve is due out with its interest rate statement for September. At the time of recording, futures traders are pricing in an 82% chance of a 75 basis point hike. The question is, will the US central bank surprise the world, raising rates by a full percentage point? We'll find out on Wednesday at 2:30 p.m. Eastern Standard Time. But bear in mind, the Fed is not the only show in town. The Reserve Bank of Australia, the Bank of England, the Bank of Japan, and the Swiss National Bank will have all spoken by Friday's closing bell. So let's take a look at some of these events and what else is in store for the third trading week in September.
So let's take a quick look at the landscape as we see it for the week, starting with Monday. It is a wide open economic slate, and I just want to reference the 10-year bond because we have been very aggressively pricing in further rate hikes, and you can see here on the weekly we are now just sitting at a real key inflection support point here, which we've already tested. If you can look on the daily there, you can see the way that the market is pricing in more aggressive rate hikes from the Federal Reserve, and we're now sitting at the 114s area where we were back over the summer in June, and it's now a question of whether the market is going to want even more and we're going to be even more hawkish, or whether we're going to have some sort of stability from here. The bond market is where you will see that first, no question about that. If we do get any dovish tones at all, we will see some upside in the 10-year, potentially then bringing our first point of resistance back up here around about the 119s, but it's highly likely we're probably not going to get up there within a week. Moving on to Tuesday, we are looking at the Reserve Bank of Australia releasing their meeting minutes. We're looking for something that's a little bit more hawkish, and the question will be how the Australian dollar is going to react to that. It has been on quite a journey the last few weeks, and you can see here from the 4-hour that the bulls have not held on to this 67 range. Just at the close of last week, we have reversed and just skewered back into it, but I'd say overall potentially we're looking for more bearish downside overall in the medium term on the Australian dollar, but that doesn't mean to say we can't get some decent sized rallies, and clearly Tuesday is going to be one of those key inflection points for the Australian dollar. So from here, if we did rally, that brings our first resistance point back up to the top of this range that the bulls were trying to hold, past the 67.70 area, round about up to the 67.85s, something like that. Moving on to Wednesday, and it is difficult to overstate how important the Federal Open Market Committee's decision will be for this week. It is the apex of the week, and all markets will be affected to some degree. It's kind of like dealer's choice, really. Pick whichever one you want to focus on. For me, I'm definitely still interested in the S&P 500. I've still not changed any views on that. Bearish overall. If we have any dovish tones out of the Federal Reserve, that would be bullish for stocks. We are sitting now at a very key inflection point here around about the 3800 up to 3900. That's a key support for me, and if we now I honestly can't see much upside potential here from any of the indices, given how we rejected this 4100 area a few days ago. If we do get more downside from here, it really just opens the door for a very relatively swift move back down to 3700 area. If Wednesday is the biggest event, then Thursday is probably going to be the most complicated. You have got a lot of central bank action. We've got the Bank of Japan, who are issuing interest rate decisions during the Asia Pacific session. Now, they are expected to hold the dovish line, and I can't see how that's going to change. Just quickly referencing the yen itself, we've been getting daily dialogue out of Japan now, trying to talk some strength into the yen, but it's not actually worked so far. For me, you've got to be very wary of a currency pair like this. Yes, it looks very good still. 147, which is this Fibonacci extension up here, is definitely something that is on the cards. However, the Bank of Japan could intervene at any point in time. So be very, very careful if you are wanting to be long dollar yen at the moment. It could come at a very unexpected time, and it's a very dangerous game to be playing when you're trying to fight a central bank. We've also got on Thursday Bank of England and also the Swiss National Bank. So it is going to be quite a complicated FX session across the board. For me, the pound itself, I don't know. I mean, it's not looking good. We could definitely get some more downside from here off the back of Thursday. Commitment of traders data is definitely pointing to more downside at the moment, and there's a lot of open interest in this market. But when you start to see the first news headlines potentially pointing to a move to parity for the pound against the dollar, I'm not sure I can see that just yet. We are still sitting at 114. These two red lines here are the support points from the COVID-19 pandemic in 2020. So we have closed the week just above there. So I would just wait and see with that one. It's not a market that I would particularly be wanting to try and work with on an intraday basis. It can be very, very painful if you're constantly trying to scoop the bottoms, trying to catch those falling knives on a currency pair that is just focused in one direction. So be very, very careful with something like the pound this week if you decide to play into that on Thursday. There's a few key drivers out on Friday, but I would say that by the time we get there, most market participants will have pretty much had enough for the week. It will have been a very, very, very dense, compact week. So please do be on your guard Monday through to Thursday. And if you've had a good week, do not give it back on a Friday. So lots to get your teeth into this week across the board.
So anyone would be hard pressed to find a trading week as important as this one. Long gone are the dog days of summer. We are now firmly in the home stretch of 2022. Will it end with a bang or a whimper? By next Friday, we'll have a good idea where the world's head financiers see the chips falling by January 2023. Remember, victory loves preparation. If you stay prepared, vigilant and disciplined, you can capitalize on the many opportunities that will be coming your way over the next 5 sessions. And need any help? We are live in the trading room 4 times a day, and we'll be covering the Bank of England and FOMC in real time. So buckle up and get ready for one of the biggest financial news weeks in recent memory. See you in the trading room.